You're listening to Seven Horns AI, your AI-powered market update. Good morning and welcome to your weekend market review for Sunday, June 7th, 2026. This past week, and especially Friday's session, saw a dramatic shift in market sentiment. The S&P 500 tumbled 2.64%, snapping an impressive 9-week winning streak. The Nasdaq Composite plunged 4.18%, marking its largest single-day decline since April 2025. Even the Dow Jones Industrial Average, which had hit record highs earlier in the week, retreated 1.35%. The fear gauge, the VIX, spiked nearly 40% to 21.51, its highest close in months. The clear catalyst was the May employment report. Nonfarm payrolls surged by 172,000, more than double the consensus estimate, with the unemployment rate holding firm at 4.3%. This robust jobs data immediately reignited fears of further Federal Reserve rate hikes, leading to a swift repricing in the bond market. The 2-year Treasury yield jumped 12 basis points to 4.16%. The 10-year breached 4.5%, and the 30-year crossed 5%. Intraday on Friday, markets opened sharply lower and never recovered, with selling heaviest in the morning and no meaningful bounce throughout the session. Investors aggressively rotated out of high beta growth names and into defensive sectors. Megacap tech bore the brunt of the selling. Tesla shed 6.56%. Nvidia was down 6.20%, Meta Platforms lost 5.51%, Amazon dropped 3.06%, and Microsoft declined 2.66%. Even Apple and Alphabet were down more than 1% and nearly 1% respectively. The Philadelphia Semiconductor Index, or SOX, cratered roughly 10%, with companies like Marvell Technology falling 16.74% on Friday, though it did see a rebound of 6.2% in extended hours, and Navitas Semiconductor down 18.23%. Broadcom, despite reporting strong revenue, still dropped nearly 8%. On the flip side, classic defensive plays like Coca-Cola gained 3.46%, and McDonald's added 2.61%. In commodities, gold sold off 3.65%, while crude oil fell 2.72%. As for significant news breaking over the weekend, our data does not indicate any major new corporate or economic headlines. However, geopolitical tensions, particularly regarding U.S.-Iran relations, were noted as an elevated risk heading into the weekend, which could certainly impact market sentiment when trading resumes. Looking ahead to the coming week, all eyes will be on Wednesday's Consumer Price Index release. Following Friday's strong jobs report, a hot CPI print could solidify expectations for another Federal Reserve rate hike by year-end, further challenging growth stocks. The severe sell-off in semiconductors and artificial intelligence-related names will also be closely watched to see if it was a one-day panic or the start of a more sustained rotation. We also have a few earnings reports on the docket, including UEC on Monday pre-market, Oracle on Tuesday after the close, and Adobe on Wednesday after the close. Finally, tonight's Asian Open will be critical. Asian markets closed lower on Friday, with Japan's Nikkei down 1.36% and Hong Kong's Hang Seng down 2.47%. However, the worst of Friday's U.S. declines occurred after their close. Tonight's Asian session will be the first opportunity for those markets to fully digest the U.S. bond market's repricing of rate hike expectations, potentially setting the tone for Monday's global trading. That's your market wrap for today. This has been a Seven Horns AI production. For more insights, visit us at sevenhorns.ai. We'll be back tomorrow.